Hello everyone and welcome to the Nomad Hedge. In today's video, we're briefly going to explain what the FOMC meeting yesterday was all about. And then we're going to see how the market reacted by taking a look at the T-bills, the dollar index, as well as the major indices. But first, if you're new here, consider subscribing to this channel and hit that like button if you're enjoying the content in this video. The Federal Reserve raised interest rates by 75 basis points for the fourth time this year to a range of 3.75 to 4%. Now, this is the highest level since January of 2008. Powell suggested that the Fed funds rate could end up higher to around 4.75 to 5%. Now, previously, the Fed projected a target range of 4.6% in September this year. The Fed has now recognized that the jobs market is helping driving up inflation. Since there are nearly 2 openings for every unemployed worker, which is pushing up wages, this is a trend that the Fed is now seeking to cut off. But we will probably see the Fed funds rate top out near 5% before we're seeing an end of continued rate hikes. However, if worker demand substantially exceeds supply, the Fed will continue to hike. Simply put, the Fed is gauging the labor market by looking at both employment and inflation as a reason to keep tightening. By looking at the market action yesterday, it started to reverse to the downside when Powell basically hinted that rates will stay higher for longer. He also added, pausing is not something we're thinking about. Okay, so let's begin by taking a look at the US dollar index here, or the ticker symbol DXY. And as we can see here, as soon as we cross below this 50-day moving average, the dollar index has just been moving up higher. And it's currently trading above these moving averages here. And so we can see here, if we're looking at the technical patterns here, there's a potential falling wedge here. So this thing has a potential target for around 118 possibly, which is this Fibonacci extension of 1.618, and so that's a possibility because we do have a buy signal here right now on the MACD, which also signaling that it's above the center line here as well. So that's pretty bullish. And so if we're looking at this pattern alone, I mean, this is a rising wedge. So, but we did not break the long-term higher low trend line here, so this was acting as sort of like support at these levels. So the trend is still continuing up. Maybe if we're finding resistance at these levels here, that maybe this thing fails to break above the falling wedge, and eventually, I mean, if this one is going to act as resistance, that we could possibly see a breakdown. So that's the only thing that we would have to look for now, if we can even break above this thing or if we're gonna stay below it. But then again, I mean, if we're breaking above this trend line here, we could possibly see some resistance right here, which would correspond to this trend line here. If we take a look at how the DXY is currently trading on a monthly chart, this is the huge higher high trend line. So this would be the last resistance if this thing plays out. And so if we touch this thing and then maybe pull back from there, that would be a very good sign, because we haven't tested it thus far. So we could possibly see this one as a final test. But obviously, if we're breaking above this thing, the fib extension 1.618 or 118 is going to be the next target. So that's just one thing to think about. Moving on to the 10-year Treasury yield, and as we can see, we found support just at the 21-day exponential. And so we're starting to poke here just below that high-low trend line. And it suggests that if we would break above this thing, if we look at the RSI, for instance, we do still have some room to the upside if the yield's going to move up higher. And so we're also seeing a buy signal here from the MACD, suggesting that we could see higher yields in the coming days ahead. So maybe if we're breaking above this resistance line here that we saw previously, I mean, then the yields are just going to move up higher. And so higher yields means that a lot of people are going to see these yields as attractive, and more people are going to buy the US dollars. That's going to drive up the US dollar even higher if foreign buyers are coming in. So if we take a look at this thing on a weekly chart, I mean, we broke above fib extension here of 0.618. There's nothing stopping this thing to just move up higher. There isn't so much resistance here at these levels. I know we can't see this thing as a stock or an equity, but I'm just saying here from this point of view, I mean, the yields could just move up higher. I mean, look at this thing. I mean, this thing is just week after week has just been moving up higher. And it looks even more extreme on a monthly chart, because on a monthly, if we look at the fib extension of 0.786, for instance, it's lying on 6.925%. And what's even more crazy, look at this RSI here. I mean, it's so heavily overbought levels. I mean, I just don't understand why we're not seeing a pullback, because everything is just so extreme on a technical level. So yes, I mean, the Fed is continuing to hiking rates, and that means that a lot more people are going to find these yields attractive, and that's going to drive up the dollar. So, but for now, we will just have to look at this level. If we're breaking above this thing, it's just going to suggest that the yields are going to go up higher. So that was a brief overview of the 10-year Treasury yields, and then now let's move on to the major indices. Okay, so let's take a look at the S&P 500, and as we can see, we broke below this rising wedge here yesterday, and it was a clear breakdown, even below the 21-day exponential. So we're finding support here at the fib retracements of 382, and so we'll just have to see how the market's going to react on Thursday. But I mean, things are looking pretty bearish here. I mean, we didn't even reach overbought levels here on the RSI, so we're below neutral, and we're volume-wise, we closed above average and even on higher volume the day before. And so we're also seeing that the money flow index is showing signs of retracement here, along with the MACD showing momentum to the downside. So we could have a sell signal here within 2 to 3 days. So the sellers are now showing signs of, taking over here on the ADX, and that's pretty bearish as well for this index. Moving on to the weekly chart just to see how things are faring out. And we even closed below that 5-week EMA. We're below that 10-week line as well. So the next line of support would possibly be this 200-week moving average. If we're crossing below that 200-week moving average, this is going to be the ultimate support. If we fail this one, God knows how far we can go below. So that's just how things are looking right now on a technical level. We're fairly oversold here on the RSI, and if we take a look at how things are looking right now on a monthly chart, I mean, even on the monthly, we're seeing some support here at the 40-month moving average. We've been below this thing before, and once we were below it, we found support here at once, and now we're finding support there again. So could this time be that we're actually testing this lower low trend line? Who knows? But that's just how things are looking out right now. So that was just a quick preview here of the S&P 500. I just want to show you guys how things looked out intraday. Quite interesting, actually. There seemed to be a if we take a look at this area here, and just there seemed to be a tight action here. And we finally broke above, and then when Jerome Powell said, rates are staying for much longer, that's when everything just collapsed here. So things were pretty good technically on an intraday level yesterday, but then the bulls got squeezed, and right now it's looking pretty tight here. So who knows? I think we could possibly see a bounce here on Thursday, and we'll just have to gauge and see how things turns out. So if we're getting a bounce on Thursday, the way I think how it's going to play out, we're possibly going to see a bounce to around 38.50, and then we're just going to break down from there. That's the possibility, and maybe just close this open gap here as well. So that's how things look like on the S&P 500. Let's move on to the Nasdaq. So let's move on to the Nasdaq, and as we can see here, we got rejected just below this 50-day moving average, and the 50-day has acted as resistance previously, along with this 21-day exponential moving average. And so if we take a look at here, this was previous support, and we got resistance here a couple times, and this was also a resistance line. So the 50 has been a major or a key level to watch for the Nasdaq, and this index has actually underperformed all other major indices, and we got a clear breakdown below this rising wedge yesterday. So we don't know how far the Nasdaq can go. I mean, if we're crossing below this October low here, things are not going to look good for the Nasdaq. And so if we take a look at some of the indicators, for instance, the MACD, I mean, the MACD did not even cross above this center line here. So we're also leaning towards a sell signal on the MACD, and the sellers are clearly showing some signs of outperforming the buyers. And so even the RSI is closing in oversold levels. So maybe we could see a bounce in the coming days. Let's take a look at the Nasdaq here on a weekly chart just to get a little bit of a bigger picture. And as we can see here as well, we got rejected here just below this 200-week moving average. And this green line here is the 10-week moving average. and so it did cross the 200 week. I don't know what really that means, but whenever a moving average is dead crossing another one, it's typically not a good sign. So the Nasdaq has not participated, and if we take a look at this low trend line here, if we're crossing below this high-low trend line and maybe touching this, things could look pretty bearish for the Nasdaq, which and I mean, it hasn't looked so bearish. If we take a look at this monthly chart here, that would mean it would even break below this trend line here, going back to 2019. So it's just a possibility, I know. I mean, this is even trading below this 40-month moving average, which has acted as support a couple of times here, and so it's going to be interesting to see how far below this thing can go. Obviously, this is a cyclical trend, and this is more of a secular trend here. So the Nasdaq is not looking good. The MACD is showing, you know, some signs of maybe the sellers have had some exhaustion here for 2 months in a row. But overall, if we take a look at the Nasdaq here on an intraday chart, and the same, I mean, it sort of like resembles how the S&P traded, but this thing was a little bit harder to gauge during the trading session. So yeah, I mean, this was when Jerome Powell said that rates are going to stay for longer. And then we just got a breakdown below this trend line. So that's how things are faring for the Nasdaq. Let's also take a look at the Dow Jones Industrial Average and see how that index fared during the trading session. So lastly, let's take a look at the Dow Jones Industrial Average, and as we can see here, it got rejected at the 200-day moving average, which has been an obvious resistance line going back almost 5 times for this index. And I mean, even if we take a look at the RSI, for instance, it reached overbought levels, and this was the best performing index during this bear market rally, even better than the S&P 500. So we closed down on higher than average volume, even on volume the day before. The money flow index were showing signs of you know, overbought levels as well, and we could see here 3 days prior that momentum on the MACD was showing signs of weakness beneath the surface. So it's also too extended above the other moving averages. You have the 21-day exponential, and you also have the 50-day moving average, too extended. So on top of that, this trend line is almost intact as well. I mean, it's maybe touching the you know, the lower end of this trend line here, but it's almost intact here. So maybe the Dow could survive in the coming days ahead while we're seeing the Nasdaq breaking down. We don't know, but we'll just have to gauge and see. And so if we're going to find support here, we're looking towards maybe retracing 50% or maybe the golden ratio here. We could also look at maybe the 21-day exponential for the Dow. Let's move on to a weekly chart and just see how this thing is looking on a little bit larger picture. And we still have a buy signal here on the weekly MACD, and we're seeing that the buyers are, you know, this is closing into a buy signal here on the ADX. But on the weekly chart, we're not near overbought levels on the RSI. So I'm just thinking like maybe the Dow could continue to rip higher, and yeah, so we'll just have to see how this thing is going to perform in the days ahead. And so I'm a little bit curious about how this thing fared out during an intraday session here. So let's take a look at this thing on a 15-minute chart here, and for this index it was just basically sideways movement. Tried to break above this resistance line here, and then it got rejected. I mean, a pullback was gonna come anyways. This thing was overbought, very extreme levels. So that's pretty much how things look like here for the Dow Jones Industrial Average. And so that was just a quick review of the market yesterday. Yeah, we'll just have to gauge and see how things going to look the days ahead. So I'll make another video and try to update you guys. And so that was just a quick review of how the market performed during the trading session yesterday up until the FOMC meeting. Thank you so much for watching if you made it this far, and don't forget to subscribe to the channel and hit that like button if you enjoyed the content, and I'll see you guys in the next video. Take care for now.